internal controls and how to secure an accounting system or the financial assets of your company. This is really important, even if you aren't an accountant, to be able to look at your system and say, is this secure, or are there weaknesses that we need to tighten up? Resources are scarce, so the resources that you have, you want to take care of. The first few questions in the handout are literally from the book. They're asking you to think. They're asking you to come up with good ways and define characteristics of certain procedures we have. One talks about safeguards, and they want to know which objectives are most important and which controls accomplish or help a business to survive. So you'll go through the book, and you should be able to find most of these. You will be able to find all the answers, but you're going to have to put some thought behind them after that. How can you use these in a business? So you've got 1, 2, 3, 4, 5 that are all text-based questions and answers. And then we start with a bank reconciliation, which is very important. If you don't have tight control over your checking system and know and verify what's coming and going, you could have some serious leakage of funds out of the checking account. And that's where the bank reconciliation comes into play. Literally what you're doing is you're taking what the bank statement says and reconciling it with what your books say. Now, on the other side of that, the bank statement may have something on it that your books don't. So you're going to reconcile or put these two together. In this case, we're going to look at, and I will walk you through this fairly thoroughly, because a lot of people don't reconcile their check accounts. So, in fact, a lot of people don't even use a checking account anymore. It's all electronic, which makes this all the more important. Even though the checking account may be electronic, it still must be reconciled to the bank. That's a double check. So your scenario is the cash account of Safe and Secure Security Systems reported a balance of $2,090 at the end of May, and then it gives us outstanding checks and deposits in a transit. But the bank statement comes and it lists a balance of $33.60. Well, the first thing to do is put down the correct totals in here. So my checking account says $24.90. My bank says $33.60. Should I just change this number to $33.60 and be done with it? No. So why don't they agree? Well, let's look at the bank side first. Do they have all of the information that we have in the checking account? It's really obvious. There's outstanding checks of $500 that the bank doesn't have yet, and there are deposits in transit of, what do they tell us here? $300. So those are two things that are in my checkbook that aren't on my bank statement. So what does that mean I have to do? Well, let's see if this will reconcile it back and forth. So I have to add the deposits, so that makes this $36.60, and then I have to deduct the $500, and that comes to $31.60. Well, that still doesn't match. Okay, so what's on the bank statement that's not in my checkbook yet? Because banks do all kinds of services for us. Well, they collected $680 for us, because they tell us right here the balance included a collection of $680. So we're going to add $680 to this total. There was interest revenue. I think it tells you that, yeah, interest revenue of $10, so that gets added. And that should help a little bit. That gives me $31.80. Uh-oh, now I don't agree. I'm $20 off. And if you look in that description, there was a $20 service charge. So bingo, now you're balanced. That's how you do a bank reconciliation. You reconcile first, you get your balance correct from the bank with what you've already done in your checkbook. Then you look at the bank statement and add or subtract any transactions that the bank has done for you or has implemented into your account to adjust, and these two numbers should agree. Now, that's not the end of it, because now you need to come down and you need to make the proper adjustments to your cash account from these entries here. And that's going to be fairly obvious here how you're going to adjust that out. You're going to debit or credit your cash account for whichever way. For all of the adds, you're going to debit, correct? And for everything that you subtract, you're going to credit and get into the proper expense accounts. So that is a bank reconciliation, a very simple one, obviously, and a lot of the information was given to you, but that's a procedure. Now we're going to do a much bigger one at the end of this handout that is going to be a little more complicated, but you can always refer back to this one because the procedure is the same. You'll just have to do a little more critical thinking to pull the last one off. So I'm going to end this, and then the next one is going to be on petty cash. And then we'll take a look at that big reconciliation at the end of the handout.